Hi, I'm Josh Taylor. I'm a research associate with the VCU Rehabilitation Research and Training Center, and I'm going to talk to you today about business tax credits and deductions for the employment of people with disabilities. A few things before we get started, just to paint a big picture for you. So the purpose of tax credits and deductions is really to increase the accessibility of workplaces and the tools used to employ and sustain the employment of people with disabilities. But it should be noted that there is a value in hiring and employing people with disabilities in all industries. There are people with disabilities working in every sector and adding value to the businesses that they work for. So the goal of these tax credits and deductions is not to subsidize the overall employment of people with disabilities, but rather to increase the accessibility. So we'll go through a few different types of business tax credits and deductions. And for each of these, we'll talk about what those tax credits and deductions are, what types of business or who is eligible, what kinds of expenses can be covered and not covered, the amount overall, and then how the process worked for this expenditure being deducted. So first we'll start with the architectural and transportation tax deduction. So this is a tax deduction that businesses can take annually to deduct from their expenses incurred to remove any of the physical, structural, and transportation barriers for persons with disabilities. And so all businesses are eligible for this, any can apply. And the costs that are covered by this are any of the costs to a facility or a public transportation vehicle to make it more accessible or usable. So some examples of this could be creating additional parking spaces that are accessible, putting in ramps and cut curbs, putting in accessible telephones, water fountains, and restrooms for individuals using wheelchairs, making walkways wider and more accessible, and accessible entrances to buildings, including the stairs and floors in some of those renovations. So it's important to note some expenses are not covered though, and those include new constructions, completion of an existing renovation that's being done to either a facility or a vehicle, and just the normal replacement of depreciable property. This has to be a specific renovation that for the express purpose of increasing accessibility. So the amount of the tax deduction, the IRS allows for a deduction up to $15,000 per year for any qualified barrier removal, architecturally or transportation-wise. And that can be deducted through using IRS publication 907 and 535, which you can find under the business expenses section of the IRS website. But it's important to note that businesses can't take both this deduction and the tax credit that we'll talk about in a little bit on the same expenditure. Those have to be kind of unique from one another. And that takes us right into the next tax credit that we'll talk about. So the small business tax credit, IRS code section 44, is an annual tax credit that allows for businesses to try to become more accessible for persons with disabilities. And small businesses specifically are eligible. And so the IRS defines small businesses as those that gross less than $1 million per year in gross receipts or have 30 or fewer full-time employees. And so qualifying under either of those criteria would make a business eligible, and that can be used every year as well. So the expenses that can be covered by this include sign language interpreters for employees or customers that are having hearing impairments, readers for employees that have visual impairments, or purchase of adaptive equipment or modification of equipment to make it more accessible. That can include things like printed materials in alternate forms, having things printed in Braille, having them converted to an audio recording, or having them converted to large print could apply for this. And the removal of any architectural barriers in buildings or vehicles. So anything that could get in the way of the physical accessibility of a space or a vehicle. And then other similar services. So a couple examples would include using a job coach or a coworker, what we call natural supports, to provide some support to an employee with a disability that may need more support in more specific ways than just the physical accessibility or the material accessibility. So there are a few things that are not covered. So again, like the previous tax deduction, this tax credit does not apply to the cost of any new constructions. And for this one, there are some restrictions related to building age that will need to be checked. The total amount of this deduction, so it's going to cover half of the overall expenditures, anything above $250, and there is a maximum limit of $5,000. So the overall cost of the project can't exceed $10,200. So the maximum benefit is $5,000 for these. and businesses can claim this credit on IRS Form 8826.50. And our last tax credit is the Work Opportunity Tax Credit, WOTC. And this provides a credit for employees hiring from specific groups. And so people with disabilities fall under a few categories that are specified in these targeted groups, but these also include individuals that have low income, vocational rehabilitation referrals. So vocational rehabilitation is the service agency that provides supports to many job-seeking individuals with disabilities, veterans, former felons, SNAP recipients, summer youth employees that are earning their first jobs and school breaks, supplemental security income recipients, which are also oftentimes individuals with disabilities, and TAMF recipients. So this applies to persons with disabilities in a few different ways. So an employer who hires someone that is receiving supplemental security income, or SSI, or who has been referred and is a certified vocational rehabilitation participant can claim this credit after that certification is received from the state workforce agency. So the process is a little bit different for the WOTC tax credit. The total amount is up to 40% of wages in the first year, up to $6,000, or if it's a person that qualifies under two of these categories, so like a disabled veteran, then it would be up to $9,600 in those first year wages. The maximum amount per employee is $2,400 within a given tax year for those employees that work at least 400 hours within that year. And so there are some minimum employment requirements. There's a partial credit of 25% of the total wages for certified employees who work between 120 and 400 hours, but employees have to work at least 120 hours to qualify for any tax credit for the business. And so, again, this is a little bit of a different process. So to claim the Work Opportunity Tax Credit, you want to complete and submit IRS Form 8850. That's the pre-screening notice and certification request for this Work Opportunity and Welfare to Work Tax Credit, and Form 9061. But these forms don't go to the IRS, they actually go to that state workforce agency. So they'll go to that state workforce agency, and they need to be done ahead of time. So the employer will need to determine the eligibility of that individual by including that notice as part of the application process when first hiring a person with a disability or one that qualifies under one of those other categories. And so on or before the time that employment is offered, that notice has to be signed by the employer and the employee and then mailed to that state workforce agency within a 21-day window after the employee begins work. And so the employer is going to document the eligibility based on the information that they get from the applicant or the prospective employee and submit that documentation to the SWA, that state workforce agency. And then they're going to certify which individuals are eligible and notify the employer that they can then go ahead and apply that tax credit when they file. And so some additional resources, we have a fact sheet that really provides a lot of the same information as a quick reference at the link below, and you'll also find it on the website that this webcast is housed on. And the IRS has a lot of great information on their website as well that'll guide through some of that process that you'll see linked there. All right, thank you very much.